In this video, I'm going to show you how I caught 90 points trading the NASDAQ futures today. So let's get right into the charts. First thing I want to point out is that yesterday, the market did have a pretty good sell-off in the morning session, and then we did recover and ended up creating this 4-hour inverse fair value gap here, right? This 4-hour fair value gap was inverted, which did create a 4-hour BISI essentially, right? And then we also did have this 4-hour BISI that got created here, right, in the overnight session. So we inverted a 4-hour gap, and then we also created a 4-hour BISI overnight. And on top of that, we also did have a higher time frame SMT with the NASDAQ and the S&P 500, right? S&P 500 took out these lows while the NASDAQ failed to take out these lows. So that was something I was aware of going into trading this morning. So like I said, we have a 4-hour fair value gap here, and we had all-time high liquidity resting here, right? So that was a few of the things that I was watching going into the opening this morning, that I wanted to see how the market would react as we opened. So if we drop down to the 15-minute chart, because remember, a 4-hour time frame, we have to pair that up with a 15-minute execution, right? So if we drop down to the 15-minute chart, this is kind of what you will see here on the charts. So what you will notice is that this 4-hour fair value gap, we did hold this in the pre-market, and we did have this liquidity get swept here, right? So this was a sweep of liquidity, right? And then we also did have a series of down close candles, which swept that liquidity, which was resting here. So this series of down close candles was the candles that swept this liquidity. If we close above the series of candles that sweeps the liquidity, we have a change in state of delivery, meaning now the market has changed from bearish to bullish once we got a close above here. Now, when we got this close above here, the market did come back down, right? We had London highs resting here, right? These are our London session highs. That was resting here. The market did end up sweeping that London session high. And when we did, I was looking now for a potential entry on this level here that swept this liquidity into this 4-hour gap, right? I was looking for an entry here, right, with my stop loss below here, targeting this high here, and potentially also the all-time high liquidity that was resting here, right? And with that, that's kind of the first trade I was looking at going into the opening. So we did come back down, and I did enter on the retest of that. I did enter on the retest of this candle here with my stop loss below here. And like I said, my take profit, I was aiming for the all-time high liquidity, right? And then when the market opened, this did end up stopping me out pretty much immediately, and we swept this liquidity. So my stop loss got triggered. Literally, I was the liquidity in this setup. So my stop loss got triggered here, but it's no problem. Just wait for the next setup. That's literally all I did. So I saw, okay, if we sweep this liquidity now, where's the change in state of delivery now? Technically, officially has to be here. So now essentially I begin to wait now for the market to displace through this series of candles that swept liquidity, right? The reason the change of state is here is because this is a series of candles that swept this liquidity, right? So the market does end up coming up here, right? And we close here, and I do enter on the retest of this change of state. I didn't enter here. I entered on the retest of this change of state, right? Targeting now all-time high liquidity, right? As well as a potential larger trade for this one-to-one risk to reward. I'm sorry, for this -1 standard deviation, right? Because if we take this manipulation leg and we extend that, we project that out, right? Double it essentially. That is a -1 standard deviation. And that was just above this all-time high liquidity. So that's kind of where I did end up putting my target on this trade, around in between this liquidity and this, because I knew if we got up here, we should push up a little higher into this level at some point. So the market did end up coming back. We did retest that level here, right? We came back down, retested this fair value gap here. I thought we were going to come a little lower, but we didn't. And then the market then essentially began to spool right into our all-time high liquidity, which we hit there and ultimately hit the target there. And that was the 90 points that I caught on this trade. So as you can see, it was about 90 points into that level from this change in state of delivery, right? And you can see that this was very bullish, right? The fact that this came back and wicked all the way back up here, that was very, very bullish, right? After a sweep of liquidity into a 4-hour gap, right? ES had not yet hit its all-time liquidity as well. So I knew it was looking to draw up there too. So that was essentially, and then you can see we did go and hit this -1 standard deviation, which we are trading at right now. We could potentially get to -2 either today or tomorrow, but who knows? I'm not trying to predict that. So that was a trade. Again, you take a loss here, totally fine, no big deal. Don't cry about it. Just look for the next setup, right? Look for the next setup and be ready to execute instead of, pouting about a loss. Be ready to execute on the next setup, because it literally could be coming within the next few minutes. So it's just about patience, discipline, right? Patience and discipline. That's all it takes in order to be profitable in this market. So anyways, that's all I got for y'all in this one. I will see y'all in the next one.